today we're going to be talking about this bifurcated economy. We're hearing about the rich getting richer, the poor getting poorer, and let's take a look today at how that's actually playing out in the stock market. Hey, happy Friday and welcome to Wealth Talk. I'm Rob Luna, and today we're going to be talking about this bifurcated economy. We're hearing about the rich getting richer, the poor getting poorer, and let's take a look today at how that's actually playing out in the stock market. So looking at today, one of the top performing stocks today is Peloton. Peloton, as you know, is it's been one of these stay-at-home plays. It's a workout bike. We're not too inexpensive, few $1,000s to get that bike at home. Then a monthly subscription fee anywhere from $35 to $100 and something per person. So obviously, this is something that is not necessarily for the people who are worried about the $600 or $300 a week unemployment stimulus check, but the people who probably are doing pretty well during this economy. Just yesterday, what was another stock that was popping? Restoration Hardware. Restoration Hardware is a stock that we've talked about for a long time, almost since $70 a share, and now well up over $300 a share. This is not inexpensive furniture. As I look around my house here, just about everything is Restoration Hardware. But this is a company that, as people are continuing to move out of the city into the suburbs, finding out that they're able to work from home now, they're spending some money in upgrading their home. Restoration Hardware is hitting actually record numbers, and their forecast going out is also very, very positive. So what does this all mean essentially? Well, what we're seeing is the big talk about in this economy, there's people that are obviously struggling. Look at the small barbershop owners, salon owners, restaurateurs. Those companies are doing very, very poorly. But people who have maybe a higher level of education are able to shift to that type of job where they can work from home. You're actually seeing those companies, some might say, unfortunately, benefit in this type of situation. But I think this is a great lesson, because one thing that we all know is that the stock market is a reflection of what's going on in the actual economy. Last week, we talked about the power of narrative and trying to understand what's going on in the economy. And when we choose stocks, choosing those stocks based off of the ability to kind of fall in line with that narrative. So today, what we're going to do in just a brief period of time is we're going to highlight two stocks that I think you should look at. In full disclosure, one of them I own, the other one I don't. I'll tell you what those are in a minute. But also, of course, this is not a recommendation to buy. Do your homework, talk with your financial advisor. This is really more about educating you what's going on in the market and how you might really want to think, and the type of thinking that our investment committee is doing for our clients right now. So when we talk about this, new shift, what's interesting, out my window here, I'm about 3 to 4 blocks away from Rodeo Drive. And, what's crazy right now is down there at Canali the other day to pick up a suit, and you looked at Gucci, Louis Vuitton, Hermes, all these top name brands with lines out the door. What's very interesting right now, I think, is, first and foremost, people are, not spending money on trips, obviously. I think what we're starting to see is people, treating themselves a little bit to furniture, to higher end clothes. But we talked about this millennial generation. We talked about the power of influencers. We talked about the power of Instagram. And we've also talked about the power of brand before. And brand name recognition, I think, in the day and age of Instagram, especially with this millennial generation, which we talked about being the largest generation in American history, is very, very much into brands. And so when you're looking at that and what's going on right now, you might want to think, well, okay, well, what are some of the hot brands maybe? And what's maybe a good way to play that? Well, we know that people are starting to shop more at home. We know that there's, a handful of brand names that everybody knows, some of them that I mentioned. There's also, for the millennials, these new and up and coming brands. One of the hot ones out there right now is Off-White. And so when you start looking at the publicly traded opportunities of how do you play this, one stock we want to talk about today is Farfetch. The symbol is FTCH. Full disclosure, I personally own Farfetch. And so Farfetch is interesting because They are a marketplace online at farfetch.com. They're also the owner of the brand Off-White and a couple of other brands that are very, very hot right now. This is a stock that went public at about $20 in 2018, trading around 26 to 27 right now. And so I'm highlighting this one, unlike some of these names that are 3, 4, 500%, there still could be some potential room on the upside. Why I like this company? Well, we talked about this idea of brands being very, very important to millennial generation, but also when you look about the opportunity, online commerce right now for luxury brands is a very, very small percentage compared to general commerce on things you buy like on Amazon. Luxury brands in general are about a $300 billion industry. Only about 12% of that is being done online right now. When you look at McKinsey and some other numbers that are out there right now, between now and 2025, so just over the next 5 years, that's expected to go to 25%. So just about doubling the amount of brands that are being purchased at home. I think a lot of that research was done prior to COVID. And if you look at that, I think that could be ramped up quite a bit. So this is a company that owns a very, very hot street brand that I think is here to stay for quite a while. They've created a marketplace where you can buy all of these other top brands. They've created a lot of trust so far with their clientele, very good reviews. And when you look at some of the other major competitors in the e-commerce space, like an Amazon, for example, is probably the primary one to talk about, they've had a lot of issues with counterfeits and so forth. And so, I know personally, I buy a lot of stuff on Amazon, but when I'm thinking about buying something that's a luxury brand, Rolex watch, Canali, Hermes, Tom Ford, any of those types of things, I've never personally purchased any of those from Amazon. So I think Farfetch could wind up positioning itself as the Amazon for luxury brands. And so again, not necessarily a recommendation to go out and buy it today, but something to put on your radar, and more importantly, a way to start thinking when you're screening stocks. The second one that we're going to talk about today, kind of in the same concept of haves and have-nots. Well, when you talk about the haves and have-nots, what's very interesting, the next company I'm going to talk about, which we don't own in full disclosure, is Toll Brothers, symbol TOL. So Toll Brothers is in general a luxury home builder. They build in the Sun Belt areas here, Southern California, Arizona, but they tend to focus on the higher end homes. They just came out 2 weeks ago and they said that for luxury home delivery, they are hitting their highest numbers ever on record. And so this is all just validation of what we've been saying, is that the economy for some obviously is very, very challenging. And that obviously is a much larger political and social issue that needs to be corrected. But some people are doing exceptionally well. And so when you talk about us being in the middle, I think, of a huge structural shift in our economy, and probably one of the best times to be investing on where that economy is going, we talked about remote work. And so you're seeing the companies like Zoom and DocuSign that we've talked about doing very well. But when you think about being able to work remote, when you think about doing a lot of things remote, like obviously working out, like what people are doing now, like Peloton, having home offices, that requires a bigger home. That requires not necessarily having to be in the city. So a lot of people are going out, according to Toll Brothers, and buying these much larger luxury homes. And this is a stock that's trading at a very, very reasonable valuation. We think the leader in the space out there. And so again, with the narratives of the haves, the have-nots, the work from home economy, we think Toll Brothers, symbol TOL, is something that you should consider in a portfolio. So that's it for today. I've got to unfortunately take a flight out to Scottsdale in a little while. I'm about to do my presentation on Fox Business here in a few minutes. But again, today, think about narrative when you're investing. Where is this economy going? What are we seeing? What are some of the stocks that may benefit? Those are two that we're talking about today. Farfetch, symbol FTCH, and Toll Brothers, symbol TOL. I hope that gives you some food for thought and some ideas until we talk next Friday. Until then, continued wealth and health, and we look forward to seeing you on the next Rob Luna's Wealth Talk.